So far in 2024, I have made $27,840.39 on gold. And gold has been a rock star in my account recently, but not so much if I take a look at the last 1 year. You can actually see that in the last year, there's a period of time where I just had a pretty bad losing streak, and it actually was a net negative contributor to my account for, the last over, this big stretch. But what changed? Why are things working so well now for gold in accordance with my trading strategy? I'm going to go through my current long trade on gold and talk about why I entered, why I added up 3 different times now on this trade, and what has contributed to these massive spikes in gold, P&L on my account. So here's the gold daily chart, and I first want to just mention that my last trade on gold happened right around over here. I went long. I talked about it endlessly in my videos during that time, so I'll just make a quick clip here, a quick reference to that initial trade. We'll go back in time and take a look at what I was thinking at that moment. So I'm going through a gold trade here that I bought a few days back, and for a little while it's just been chopping range bound, but finally with today's PCE numbers showing kind of some cooling in the inflationary department, gold loves this, right? Because that could signal that rate cuts are still on for this year, and that could bring gold back to its highs. So anyways, I went long. I'm in this current position here, and what I'm looking for, and I'll talk about this more in just a second, is I'm looking for a break of some of these resistance points. I am currently trading GLD. That is the ETF that I've got. So I'll pull this up so you can see it a little bit better. There's GLD. So I'm in gold and silver ETFs. Here you can see I'm up about $1,000 between the two of them. So I am bullish on metals, and I'll talk more about my oil trade, which is really moving here in just a second. But I do want to mention that you noticed there just a second ago that my gold trade is significantly smaller than my oil position. And that's because on the daily chart, I don't love that this thing is still kind of range bound, that we aren't in this sort of monstrous clear upward trend on the daily chart. That's why I took a relatively small position. That being said, I am looking for an opportunity to actually add to this trade. So what I'm looking for is this $2,060 an ounce mark, which I would have marked as my resistance level here. I'm looking for that to fail. If it fails, it's not a guarantee, but if it does show me signs that, hey, we might actually be breaking out of this consolidation period, I may actually add to my gold trade. And this has been something that I've been talking about. So if we see just a clean sweep through these highs and strength is really there for the bulls, I'm going to be looking to actually add size to my position. So I entered a long on gold, and it just rocketed up and then consolidated, and then it jumped again, and it just kept going and going and going. And eventually I trailed out of the trade, took my profits, and the market started to pull back. So I got out of the trade, I can't remember exactly when, but I believe it was somewhere around here. So I took profits, the market kept going on without me, and then I was feeling a little silly about letting go of my position. But again, a win is a win. I made a lot of money on that trade. I think it was, I can't even remember. I think it was near $30,000. It was a crazy trade because the move was so violent. And during this time, we have to think about what was going on. Well, there was some geopolitics, right? Within the Middle East, there was concerns out there. We also started to see, the idea overall that the economy could be starting to slow down, and that, central banks around the world would start cutting rates. And that led to a huge repricing of gold. I mean, at the low here, we went from 1985 up to 2431, and we're getting back close to that number. So why did then the market pull back, and what made me get back in? So again, the market, I exited the trade a little bit early, but then I watched it sink back down lower than my initial entry over my stop loss. So I went ahead and I looked and I said, well, you know what? We're hitting really key support on the daily chart. And one theme here I want you to understand is that pretty much all of this took place on the daily chart, because I think the daily chart is very clean for price action setups. And again, most of the reasoning for this trade, let me be very upfront about that, like 80% of why I took these trades were all fundamental. The reason that I went long on gold was primarily because the edge finder got super bullish. As economic data started to come in very light, what we started to see on the edge finder was a very bullish score start to form. Let me walk you through some of the current data that is showing that the economy in the US has been materially slowing. And before I show you that data, Let me remind you that slowdown in the economy is considered bullish for gold because people start to get a little bit nervous and they say, well, look, economic data is starting to slow down. Maybe I don't want to be all in on stocks. Maybe I want to diversify and buy something like gold, which can typically do well if there's like a fallout in the world, right? Gold has been the standard, way of storing wealth safely for thousands of years. And so you have to remember, at its core, our simplistic, human minds, we think, well, if the economy starts to slow down, maybe gold is not such a bad place to park some money. So that's been one of the key drivers. The other thing is, remember that slowing economic data and slowing inflation could lead to the Fed cutting interest rates, which could weaken the dollar, and it could make gold rise relative to the purchasing power of the dollar. And not just the dollar, but other central banks globally are looking to cut interest rates this year. At least that's the status quo at the time of recording this video. And with that directional, towards going to cut rates, that story is very, very bullish for gold. If you talk to anybody in the metals world that understands fundamentals, it's all about the rate cut. And it seems increasingly likely that with slowdown in the economy and inflation coming in a little soft recently, that gold can continue its rise. Let's talk about some of the data. So GDP growth has come in lighter than anticipated. We were forecasting 2.5, we got 1.6. PMI data, which is basically a survey to purchasing managers, it asks people in the manufacturing and services PMI that have, decision-making power, are you looking to hire more people and to purchase more things and to do more investment? And if the answer, comes in a resounding yes or no, we see that in the overall index of that survey results. And both services and manufacturing came in lighter than anticipated. So shows some slowdown. And this is one of my favorite indicators because it is forward looking. You're asking people in the future what they plan to potentially be doing. Retail sales also came in lighter than expected. Perhaps consumers are feeling a little constrained because of all the inflation and they're spending less. That's showing up in the data here. Jobs data came in light. We got 175,000 jobs compared to what was expected, 238,000. Another tick bullish for gold. Remember, the Edge Finder, our software here, is going through all of this data automatically and generating a bullish reading. So as I've listed these things off, GDP light, PMI light, retail sales light, the inflation coming in lighter than expected, but still relatively in an overall high environment, very bullish for gold, right? Employment data coming in light. The point that I'm trying to show you here is the data was what got me long, not a pretty picture on a chart where I'm drawing lines and zones of support. Yes, that stuff is great. Technicals are valuable, but don't get me wrong and don't get it twisted. Very much this trade was based on the fundamental story that's forming for gold, and the huge moves usually are fundamentally backed. By the way, if you're interested in getting a copy of the Edge Finder, you can sign up for a trial. We'll leave a link to that down below in the description if you want 30 days access. Again, just check the description for that link. You can fill out the application there, and if you're a good fit for it, we'll reach out to you and get you set up with a copy for 30 days. And before I move on from this, I genuinely believe strongly that any trader who is trying to use fundamental analysis in their trading absolutely should be using a tool, whether it be ours or someone else's, to help source the data quicker. There's way too much here for you to do it all in your head. It's just too much to think through. So having an algorithmic or a systematic way to parse through all of the economic data is how fundamental analysts survive. There's just too much of it to have it all swirling in your head. So again, take advantage. Trial is down below in the description. Next, we can't ignore seasonality. Part of the reason I took this trade is because in the months of April and May, historically speaking, on a 10-year historical look back period, gold is up during these 2 months. And so far, that has come out very in line. We see March, April, May, seasonality has played a picture or played a role in the full picture of gold's bullish reading on the Edge Finder for these very reasons. The months of March, April, May are positive historical months seasonally in the months, again, shown here. Now, I want to get on to the technicals, but again, I just want to reconfirm that the majority of the reasoning behind this trade was not the technicals. The technicals are the very easy part. Not to bash technicals in any way, but anybody can draw, support and resistance lines, trend lines, that sort of thing. Fundamentals are another story. But there is a technical component here. As price pulled back to this level of support and I got all the confirmations on the fundamental side, I bought my first position. I entered here once. The market proved, to be in the right direction when we broke out of this resistance. So when we pulled back there, I added a second trade. And then we shot up again. And as we pulled back off of the intraday high here and we got CPI data that looked really good, I added a third time, and that brings me to my total position of 2,000 shares on GLD. So if I click over to GLD here, this is the full position. Again, my goal here is just to let this winner run. And by the way, you'll notice that the price here has, the way WeBull, my brokerage, does this is they average your total position and they create an average price rather than showing the 3 different orders. So even though I did 3 different orders or 3 different purchases, which you can find in our Discord channel if you're in there, I bought 3 different times, but WeBull just shows you your average price. So I like to draw it all up on the XAU USD, the spot price of gold, for simplicity. By the way, if you'd like to join the Discord channel, it is free to join. There should be a link for that down below in the description. And also, if you'd like to trade with WeBull, there will be another link for that in the description as well. Thank you guys very much for watching. I hope this was helpful to you in explaining this gold trade start to finish, and let's see if it can continue on higher. So thanks for watching. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.